Hello, let's see if that works now. I only cut out, said my internet was down, but I'm in the middle of my living room, so it should work. So this is Terra Talks. I'm going to be doing it Wednesdays at noon. That is my plan. We're going to be talking about the 5 C's of credit today, because I know I never got taught credit. With the real estate investing, I talked to a lot of tenants who have no idea about credit, and you can't even get a rental without credit these days. So it's very important to understand how we get our credit score, what affects our credit score. And you'll also notice that not every place that you check your credit is going to have the same credit because it's a weighted scale. So just be aware of that as well. So they're the 5 C's of credit. So it's character, capital, capacity, collateral, and then of course your credit score. So character just shows your education background, your professional experience, length of time that you have been at your job. So it's a lot of times been like, I can't get a mortgage because I just changed jobs. I got to wait at least 3 months to get a mortgage. So that's very important because it does affect your credit score. So how long you've stayed there. So staying in a job a really long time will help. And then if you are a renter or an owner or that type of thing, it does affect your character in regards to your credit score. Number 2 would be your capital. So the amount of funds that you're going to be putting up for yourself. So if it's a 5% down mortgage, a 10% down, 20, all that is in your capital. If you have less than 20%, you will be having to get a mortgage insurance. So that's the bank's insurance to make sure that if you default, they're covered for your mortgage. I know with our last one, it was only like $1,700. So it's not too much. You don't even really know the difference because they roll it right into your monthly payments. So that's pretty cool. I know there's CMHC, there's Genworth, and I think there is a few other ones that you can go with. Usually your mortgage broker does all that. You sign a piece of paper and you really don't even know the difference. And that's for less than 20%. Yeah, you got to pay a mortgage insurance. You also can get your down payment from RSPs. So that's a pretty cool thing. Always have those discussions with your mortgage broker because there's so many products out there. There's so many products out there that you never know what you could qualify for or what programs are available. So that's pretty cool. Capacity, that's another one. So capacity is how well you're going to be able to repay back your mortgage. So they check it off a total debt service and gross debt service. So your gross debt service is your property taxes and heating costs. So that has to be 32% of your income and no more than 32% of your income. So that's your property taxes because they come first. If you don't pay your property taxes, they can foreclose on your property and take it away. Actually pretty cool. City of Leduc does it once a year. If you don't pay your taxes up, you can get properties on auction. So if you don't pay your taxes, it's pretty cool. And the heating costs, because we have to have heat. We are in Alberta. Like, look at our September, for heaven's sakes. Is it snowing? Is it raining? It's pretty chilly. So we got to have that. And then, of course, your mortgage payment. That includes your principal and your interest. So your principal is how much you pay down on your mortgage, and your interest is what the bank gets. Bank always has higher interest in the first few years than it is principal because the banks want to make sure they get their money. That's why they are who they are. So if you notice on your mortgage pay downs, interest is always more, that you pay more on a differential. And then your total debt service is also including any credit cards, line of credits, car payments, all that type of stuff is included in your total debt service. And it has to be less than 40% to qualify for a mortgage. Again, always have these conversations with your mortgage broker and start having these conversations early with your mortgage broker because there's so many different projects. Mortgage rules are changing all the time, and the mortgage companies have to adapt to the new rules that they could be offering new programs. So it's pretty, it's an ever evolving thing, your mortgages. So that's capacity. So collateral will be the actual asset themselves, the house. So they want to make sure that it's worth what it's mortgaged for. So they do their own appraisals on the back end. Sometime, depending on the property, they might bring out like an actual appraiser versus just a bank's appraiser. who just does all their research online. So they do that as well, the collateral, how much you've paid off as well on like a credit card or anything like that. That's why your credit score will go down if you're really close to the top end of your credit card. So you always want to keep your balance below, I think it's 10% or I don't know. You want to use it, but you don't want to have to use it. So that's key. And then your credit. So credit is on a weighted scale. Very important to know, because if you check at Equifax, if you check at TransUnion, you're not going to get the same score because they do weight them different. So that's, yeah, I check one, you're like, yeah, and then you check the other one, you're like, where did the other 10 points go? Like, I'm the same person, nothing's changed in the last 10 minutes. So, and if you do check them yourself, it doesn't hurt your credit. If someone else checks it, it does. So always be aware of that, because shopping for credit is not a good thing to see. So lots of times that happens when you're going to go get a car loan. You shop for credit. So you go to this car station and this car, and they all pull your credit. And then you can see, well, right here, you were obviously looking for a car, and these guys denied you, and then these guys denied you. So it's right there when you look. So I definitely would suggest that you go onto Equifax or TransUnion. It's $10, maybe $20 to go check your own. Credit Karma, I believe, is also an app that you can check your own credit, and it's free. So I don't know how that one relates into it, because I've never actually used that one myself. But be careful too if you're going to go check at credit like TransUnion. I'll try to offer you one of those check it free every month for monthly subscriptions. If you're not worried that someone's going to take it, check it once a year. Like, I only check mine once a year. But if you want to, like if you're going to be buying lots and buying bigger projects, it might be worth to get that subscription. I know a couple of my investor networks from Rain, they have the subscription just because of the quantity of purchases that they make every year and the value that they're creating for themselves. Might be more for credit fraud. So so your credit score goes on payment history, is about 35% of your score. So don't miss a payment. Don't miss payments, because that's your credit history. And then it goes on a less than 30 days, less than 60 days, less than 90 days score. Your current level of approximate debt, so that's 30% again. So don't go over, like, use your card, buy a tank of gas, but pay it off. Don't try to get to the very max level, because then your credit score will drop. So be careful for that. And credit, because if you pay something, your credit score, it changes every month. So Christmas time comes, you use your credit card, and then you pay it off in February. So your credit score in January is going to be different in February if you paid it off. So that's pretty cool to know. The length of credit history, so how long you have had a history. I know my husband, he's new to Canada, so when he came here, no credit history, so that affected his score for sure. So anything like that, it's how long that you've been able to show a history. In regards to someone who's just come over, it is possible to bring that history over from another country. So that's pretty cool that you could do that as well. And then we have 10% is number and frequencies of new credit inquiries. So that means, like, if you're shopping for car loans, that will definitely affect your credit score. So if it's possible, go to TransUnion or Equifax or Credit Karma, print it and take it with you. Lots of them, they might not accept it, but if you don't ask the question, you're not going to know the answer. So you might as well try and see what they say. Bring it there. They can have that copy. Lots of times, I know when I was trying to find a renter, I just wanted to make sure that it was their name and their credit score within the same screenshot, even potentially, just so that I know it's not someone else's. So, and it even said the date it was pulled, so if it was recent, that would help. And the type of credit. So there's difference between revolving credit. That's like a credit card where your payments are not the same. Excuse me. So that's going to have a different value than a car payment, which is the same payments all the time. So when we were trying to start building credit, it's on average 2 forms of credit, preferably a revolving and then a payment, credit card, like a car payment for 2 years is a good marker for your credit. So 2 forms of credit for 2 years, 1 revolving and 1 a payment. So they are both good to have because it shows variation that you can handle and manage your money, as well as, yeah, so different interest rates and stuff like that that come with it. So it is a weighted scale. So again, that was 35% for payment history, 30% for the debt level. It was 15 for length, and then 10 for frequency of inquiries, and 10 for the type of credit. So, but again, it changes. TransUnion and Equifax are not weighted the same. So just be very aware of that. It's easier to bill your credit than it is to repair your credit. So just be very mindful of your credit. It's potentially better to call and say, hey, I'm going to miss a payment. Is there any way that we can move stuff around so I don't miss a payment? So yeah, that's the 5 C's of credit. Very important, not taught though. So hopefully that was informative. Yeah, if you have any questions or topics that you want me to talk about, let me know. I realize I talk a lot with my hands. I didn't realize as much now that I'm staring at myself on the screen. But yeah, so thanks. Talk to you next Wednesday. Bye. Thanks, Todd, for liking the post. Yeah.